Hello and welcome. My name is Suli Richardson, and I am the Community Education Program Manager at Desert Financial Credit Union, and I am excited today to bring to you this mini webinar on money saving tips and strategies. We created this webinar to provide information on how to save money and to motivate and to inspire individuals to save and to reach their financial goals. So in this webinar, you're going to be learning about how to save with a purpose. We're going to explore some different strategies. We're going to get into the nitty-gritty and talk about a lot of practical, everyday money saving tips and ideas that a lot of people are probably already doing already. But we're going to tell you how to do those things, even though we know you might already know about some of these. So before we get started into the tips of talking about the tips, I want to spend a little bit of time just talking about your why, your purpose. Figuring out your purpose, your why, that is the reason on why you would want to, do this and embrace some of these tips and these habits and strategies that we're going to talk about, is to figure out what your purpose is. And by doing that, it's going to really help you to want to do some of the things that we're going to talk about. So what's that carrot that is dangling in front of your face that would make you want to save money and change some of your habits and how you spend money? Is your goal that you want to pay down debt? Is your big goal, your why, that you want to spend less money, just spend less, keep more money in your pocket? Or are you trying to just build up your savings account? Regardless of what your why is, I'm glad that you're here, and I hope that you're going to find some of this information helpful. So the first thing is that we're going to talk about avoiding fees and get out of debt. $1 or $2 here or there does add up. Try to avoid extra fees. Thinking about my debit card, if I use it at certain places, and there's a couple that I can think of, certain types of businesses, they charge an extra fee. Sometimes they tell you, sometimes they don't. Sometimes it's a little note taped to the register, and they charge an extra 60 cents for me using my debit card. So start to pay attention to when you pay for purchases, if they're charging you an added fee that's tacked onto your bill. Take a look at your statement, online, paper statements, and see if you have any tacked on little fees here or there that's being charged to you that might seem like it's small and insignificant. Question those things. See if you can get rid of some of these extra fees that's being charged to you. If you have overdraft fees, late fees, work on eliminating those and not get into that cycle of having fees just tacked on and not questioned. Get in the habit of trying not to pay any fees. And then the last bullet says to stop spending on credit. And I know that some people have to use credit when they don't have money in savings to pay for maybe an unexpected emergency. This is really talking about using your credit cards as part of your everyday living expenses, that you just literally take it out and just buy stuff on it. We want to stop spending on credit. And I heard somewhere where, and to help a person to stop doing that is to put your credit card on ice, like literally put it on ice. Get a cup of water and put your card in it and then put it in the freezer. That will give you enough time that if you really have to use that card, you have to throw it out. And it makes it harder to take that card and just spend on a regular basis if it's an ice. Pay off debt or build up your savings. It is not an either or. You'll want to try to do both. I've talked to many people who are torn. They don't know which one to do. They want to do both. They know that both are good, but they don't know whether to pay off debt first or build up savings. Try to find that balance. Work on paying off debt while you're still trying to save money, because your savings doesn't have to be a whole lot. You just need to be saving something. So there's two ways to pay off debt that I want to talk about. One is the avalanche method, and the other is the snowball method. The avalanche method focuses on paying extra on the loan or the credit card with the highest rate, while the snowball method focuses on paying more extra on the balance that is the lowest. So whatever method you decide is up to you, but you want to pick one. And then what you're doing is that you're going to pay extra on that one particular loan while making all the minimum payments on everything else. And so you do that. And once you get that one loan paid off, you take that payment plus that extra amount that you've been putting toward that $5, $10, $20, whatever that is, and then you're going to put it on the next loan. And so you keep doing this until you get all your debts paid off. Regardless of which method you use, you want to pick one and then pay extra. And you want to make sure that you're paying that extra on the due date. Lenders, when you make your payment, most lenders take whatever is due to them first. So they're going to apply that toward your interest, and then whatever is left over is going to go toward the principal amount. So when you make your payments, that extra payment, you want to make sure to make that extra payment on the due date, so that that can go toward that principal amount. And you can also contact your lender to find out how you can do that as well. They'll probably tell you the same thing, but contact them and get them to help you figure out a plan on how to pay down your debt more quickly. Let them know what your goal is, and they'll work with you on that. And next, we're going to talk about paying yourself first. And this, I talk about this a lot. Anytime that, you're talking about, your expenses, and we talk about paying yourself first, it really means that you're going to put money into your savings and not wait. So as you get your pay increases, you want to give your savings a raise. Make sure to put some money in your savings, whether it's a percentage or a certain dollar amount, you figure it out, but always put some extra in your savings. Pay yourself first. And then regardless of whether it's your pay or a bonus or that tax refund, you want to save some of that, half of it, all of it. Get into the mindset of every time you get any kind of income coming in, you want to take some off the top to pay yourself first. The windfall, we all got a stimulus check, a stimulus deposit. Take some of that money and pay yourself first. Put some of that money into your savings account. So if you have at least $1,000 in a savings account, consider putting that into a savings certificate. Two reasons for doing that. First, putting it in this certificate gives it some kind of restriction, so the money is not going to be so easily accessible to be withdrawn without a penalty. So shortest term is usually 6 months up to 5 years, and the restriction is the reason why. It's like a time account. The other reason for doing this is that you're going to earn more on this savings certificate than you would on your regular savings account. So you're going to earn a higher dividend rate, a higher interest rate on that money. And the next one is take advantage of your 401k match. If you work for a company that offers a 401k and they offer a match program, take advantage of that. That is like having money on the table, free money on the table for you to take advantage of, to use. Sometimes people are hesitant because they're just passing through a company. They know that they're not going to be working there that long, so they don't do anything. Take the money. When you leave that company, your 401k, you can roll it over. You can roll it over into another retirement account. They don't get to keep that money. It is yours. So take that money. The last one says refinance your loan for a lower interest rate. This is a good idea to compare rates that you might have out there on a loan. Perhaps you can refinance that loan for a lower rate and then take that extra savings and then put that into your savings account. If you do refinance that loan, what you do not want to do, especially if you're trying to get out of debt, is to stretch it out further. You don't want to extend the term of the loan. You want to refinance for a lower rate, but keep it for the same length of time so that you can get out of debt. Visit your budget. There are so many places in our budget where we can save money. And the first one says how to kill off cable or premium channels and talks about using the buddy system. Eliminating cable can be difficult, especially if you're used to having your favorite shows, and also because right now a lot of us are spending more time indoors and we're probably watching a whole lot more television than we ever were before. It could be a little bit difficult, but there are so many other less expensive options than paying, I don't know what people pay for cable, over $100. I don't know. I don't have cable. But there are a lot of different options that will cost you less. And the buddy system simply means that when you get ready to kill it off, you might need to have some reinforcement. When we got rid of our cable, probably about 9 years ago, our cable service, we first of all hadn't wanted it really for about a year. Talked about it, we should not have it. I don't really like it, and just procrastinated and eliminating that service. And so when we finally did it on a Saturday morning, I remember we called, my husband and I called, and we literally had them on speakerphone and to do it together because they talk you out of it. They offer such sweet deals to make you keep that service, and they're so good at what they do because that's their line of business and they're good at it. And so before we knew it, the deal sounded so good that we almost wanted to keep it. But we looked at each other and said, but we also have that bill though. And so we stayed true to our previous commitment to eliminate that because we had already discussed it and we did it on the buddy system. The next one says eliminate extra phone features. Take a look at your phone bill. Look at the itemized page where you have all those little charges and see if there's anything on there that you have that's not necessary, that you can get rid of, that's a tacked on service that maybe you don't even need, and try to get your bill down to a lower amount. And sometimes also when they know that you're going to leave, like you're like, I'm going to switch service, they'll give you a deal. So you can even try that. And then save your change. So if you're still using cash, some people do, anytime you get change back, throw it in a jar. Throw it in a jar. That's savings right there. If you're using your card, you can still kind of round up and save some money too. So let's say you're in the store, you're buying groceries, it's $195. Round up to $200, take that extra $5 and transfer it into your savings account. And then I heard or read somewhere where there's so many different challenges that you could do to save money, where this idea was every time you use cash and you get a $5 back, you put that $5 into your savings. Just stick it in a jar. Anything. There's so many ways that you can motivate yourself to save money. So we have a lot of subscriptions today that are not necessarily paper magazines. Now we have subscriptions that are electronic kind of subscriptions for music apps. There are games, we have gym memberships, and sometimes the amount of the subscriptions just seems so small and insignificant that we just sign up for it. When they say that it's only $2.99, well, that's $3. It's only $1.99, well, that's $2. All those little $2 and $3 and $4 here and there, all of that adds up. And so if you get some savings on this, you take all of that and just throw that extra money into your savings. Review your insurance, do an annual checkup. Sometimes we love our companies. We love our insurance company. They're good by us. We've had them for years. We haven't had any trouble. And so we get complacent. But really, once a year, we should do an annual checkup to see whether we still need all the services that is provided on that plan? Is it still good for what my needs are? And then just do a price comparison and shop around. Sometimes there might be a better deal out there. And then the last one says to review your home, your car insurance, and then bundle. Bundling usually saves you money. When they can have your car, your home, your life insurance, you can save money a lot of times that way. Then the last bullet says increase your deductible, and it has 2 stars beside that. So increasing your deductible is another way to save money. The 2 stars is for me to remember to tell you that if you decide to do this, you really want to have that extra money in your savings account. So when we increase our deductible from $500 to $1,000, I needed to make sure that I had at least $1,000 in a savings account before doing this, just in case we had a claim, that we would have this money ready to go to cover that deductible. The goal was to save money on the monthly premium, and it worked, but you've got to have that money in your savings account. Trimming your grocery bills. These are a few ways that we can cut back on spending money on groceries, and there's probably a lot of other things that we can do. The first one says to use cash. If you're still using cash, cash is an excellent way to cut back on how much money you spend. There is the psychological impact of using cash, where it's kind of harder to take that cash green money out and pay that as opposed to using a debit card. It is so much more easier for a lot of us just to swipe and go, and not even think or blink twice when we're using our debit card. But it's something about using the cash that makes us spend a little bit more careful. So you take your grocery money that you're going to allocate for your groceries, you put in the envelope groceries. So when you go to the store, that is what you're going to use to pay for your groceries. When you get to the register, if you happen to have overspent, which could easily happen, more than likely you probably picked up something that was not on your list. It is okay to put it back. I've done it. The ideal for doing this is so that we stay true to what's on the list and spend less money. Secondly, meal planning, eating from your pantry, your freezer, buying what's on sale. Meal planning is huge, and it is so helpful to help us to spend less money. When you can spend that time and sit and figure out what you're going to eat for the next week, it helps you to shop for just the items that you really need to have. And sometimes it's hard to think about what we're going to eat next week. I use Pinterest, and there's a lot of other apps that can give you ideas to help you plan your meals. Next, eat less meat. I like meat, so that's, but hey, if I was trying to save money, eating less meat, I can do that. Eliminating meat from your meals at least 2 to 3 times a week would definitely save you money. We know that right now meat is very expensive. You can still eat meat, but maybe eat a smaller portion. That will help to save money as well. And then the last bullet says pack your own lunch and snacks. We know what we like to eat. We know what we want for lunch. When we are planning our meals, whether it's for dinner, think about your lunch too. What would you like to eat for lunch? And then you shop accordingly and buy the snacks that you enjoy. If you buy what you like, then it is less tempting to buy it on the go from the store or vending machines. So these are a few more ways on cutting back on your grocery bills. So comparison shopping, we get ads every week. Look through those ads and do comparison shopping. Find the store that has the best price. Using coupons is a great idea. Coupons are great, but they're only good when you would have already bought the item already. Coupons are not good if it makes you buy something that you wouldn't normally buy. And then shop with a list, whether it's a paper list or a list that you created on your phone. So I use on this phone, I have a note app that's there that as we run out of items during the week, I open it up, I speak it into my phone. Some people you can use Alexa to help you create your list. The ideal is to just have a list. You don't want to go in the store with your grocery list in your head because more than likely you're not going to remember everything you needed. You're going to forget some stuff, and you will spend more money. So creating that list, finding something that works for you. And so when I use my phone to have my list, what it does for me, because I'm using that note app, is that as I'm picking up items in the store, I delete it from my app. So if you ever see me in the store and I'm looking at my phone, I am not talking, I am not texting. I'm actually looking at my grocery list and I'm deleting items as I pick them up. And it gets me to the register a whole lot quicker. When I'm done, I head to the register. And then the last one says store brands. Store brands are sometimes just as good as some of the national brands. You and I know store brands that we like, that we don't like, and not all store brands are the same, but there are some things that we can buy that are store brand that works just as well. So I kept the dining out separate from the groceries on purpose. So determine how much money you want to spend eating out. First of all, just think, how much do we want to spend on eating out for the whole month? And then set that money aside. So it is really easy when you're dining out to, just order everything that is presented to you, because when you go out to eat, one of the first things that, the waiter or waitress asks you is, so what can we get you started with? And so they get you to start to think about, the raspberry iced tea and the appetizers, and they make it sound so appealing that you want to buy it. But when you're trying to spend less money, skip the beverages, skip the appetizers, get water. And then if you really want dessert, because sometimes I know desserts are really good, split it. At $7 or $8 a pop, split the dessert. At least you get a taste, okay? And get that satisfaction. And then consider doing lunch instead of dinner. Lunch is usually less expensive. I can do lunch out instead of dinner, or I can even order the lunch and then have it for dinner. And then the last one says, look for specials. Some restaurants offer specials, early dining specials, a discount. See if they have any specials that you can take advantage of. Other considerations, skip the warranties on small appliances, and maybe you can deposit that money into your own account. I can't tell you. There's been a few times where I have bought a small appliance that when I got to the register to pay for it, they offered me a warranty. And sometimes with small appliances, they already come with a warranty for a year. So this requires us as consumers to do some research. Do research before you even buy that appliance to make sure that, it comes with a warranty. If you're going to buy the extra warranty, is it really worth it? Or should I just take that money that I would have paid for the extra warranty and put it in my own savings account and have good faith that this thing is going to work? And then sell back your vacation and sick time. Some companies offer this option. If you accumulate, vacation and sick time, and it's going to run out, and you would have not used that money or used that time, some companies will allow you to sell it back for cash. Do that and take that money and put it in your savings. And the last bullet says, don't tell others about your savings. Some of us might have people in our families, in our circle that we know that are in a constant state of some kind of struggle because of poor money management decision. And I'm not talking about people that just have legitimate struggles. I'm talking about people that have money, but they're just not good at managing, and they know who in the family, who in the circle always have some money. So when you are trying to reach your goal to build up your savings, whether it's an emergency fund or to buy a certain item or whatever it is, you don't want to tell everybody about what you're doing, because people have issues and they might come to you for assistance, and that might prevent you from reaching your goals. We can offer help through resources and directing them to some resources to help themselves, but we consider telling others, depending on who they are, about what you're trying to do. Use less electricity. So invest in a smart power strip. This will allow you to connect a lot of your like entertainment center, computer, television into one power source, and it helps you to save money. And then unplugging small appliances, chargers, maybe the toaster, something that you don't use that often but it's always plugged in. Consider unplugging those things because they are phantom power drainers. They drain and they use electricity. And then the last one says to sign up for the equalizer plan. I know here in Arizona, we have at least, or in metropolitan Phoenix area, our two major utility companies, they offer some type of equalizer plan. So the equalizer plan works where they look at your bill over a 12-month period, they get an average, and that's what you pay every single month, regardless of what the peak season is. So right now it is July, it is really warm, and if you are not on this plan, you probably are paying more for your electricity right now. With the equalizer plan, my bill in July would be the same as my bill in um, December or January. So it helps to stabilize your budget. It stabilizes your spending plan. And so if I wasn't on this plan and I had that spike and had a extra expensive bill, I might have to tap into my savings to help me to pay that. So it pays to be in that equalizer plan because it helps stabilize your budget. So when it comes down to medical, we have a couple of different things that we could do. We can opt to choose generic. When it comes down to our prescription drugs, you want to ask your physician about that to see if there's some kind of generic that will cost less if you're having to use a name brand medication. You can also take some time during open enrollment to evaluate your medical plan. So about 5 years ago, when my insurance became what I thought was very expensive, it was going to be $600 for a month, and I think the total would have been like over $7,000 for the whole year had I signed up for that HMO plan. I did some research, looked at our past medical history, and made a decision that I wasn't going to take that plan. I just thought it was too much money. And I thought, well, my other option would be to enroll in the high deductible plan. And I took a chance with that plan. It's been 5 years, and that was one of the best decisions that I could have made. The premium was so much lower than the regular HMO. And what it did is that it kind of put me in the driver's seat of my medical life, my medical history, my medical plan, to where now I'm going to own that. And so with this high deductible plan, because it is less, that means that I'm going to pay out of pocket for a lot of things up front. And so I'm able to open a health savings account with that. So I'm going to take the money that I would have paid on that premium, and I'm going to put that money into my health savings account. So when I have to pay for medical expenses, I've got money that I've been saving to help me to cover that. This plan is not good for everyone, but it is good for individuals who are fairly healthy and probably don't have any kind of expensive chronic medical condition. During open enrollment, it is best to take some time and do some research into your own medical background and compare cost and price and see if you can come up with a plan that is going to work good for you and your family. And what I've discovered and found as well is that this kind of stuff can be daunting. It could be just overwhelming and you don't know where to start, and it's a lot. But it is so well worth the time, the energy to sit down and figure out what is best for you, because this is all about the money. Automate your savings, regardless of how you save. Automate, automate, automate. Whether it is through direct deposit from your employer, payroll transfers that is connected with your payroll. So every time you get paid, your savings account gets paid. You can use multiple accounts. You can have as many savings accounts as you want at the same place or different places. Name your accounts. By giving your accounts a name, it helps you to stay focused. It's motivating, it's inspiring, because you get to see when you pull up your bank account that your house savings has some money in it, your car savings, your education, travel, Christmas, whatever it is, whatever you're saving for, you name those accounts. You can transfer between those accounts, and you get to see your money grow, and you get to see that you're reaching your goals. The pro tip: Regulation D no longer applies. Regulation D is a Federal Reserve guideline that impacted banks and credit unions, where we were limiting our customers and our members on transfers from a savings account per month. You were limited to 6. You couldn't go over 6 transfers, withdrawals. You were limited with that. Regulation D, since we had COVID-19, the Federal Reserve relaxed that, did away with it. So that is no longer impacting consumers. So now you can transfer between your accounts and not be worried about going over and being assessed a fee. So some people don't know where to start when it comes to how much money should I be saving per month. Well, you start where you can. For all of us, it's going to be different. We're all at a different place with our finances, with our starting point and our starting points, and you're going to start wherever you can. So this, for individuals who have more flexibility in their budget and they're just looking for a formula or some numbers, this is something that you could do. It's called the 50-30-20 rule. So this rule means that 50% of your income you're going to put toward your essential expenses, and then 30% you're going to apply toward other expenses, so like the wants, and then the last 20% you're going to apply toward your savings, whether it's 401k and all those other savings account that we were talking about earlier. But you want to automate. Whatever you do, automate your savings. And last page, master the 30-day rule. So by doing this, you are avoiding instant gratification of buying something. So if you're in a store and you feel like you need to have this thing, the 30-day rule is you wait 30 days. I'm not going to buy it. I'm going to wait 30 days. And if I feel the same way in 30 days, buy it. But if I don't, that means that I would have saved myself some money. And I already talked about starting small, because if you're not a saver, start small. And that small could be as little as the change. It could be $5, $10, $20, $50, whatever you're comfortable with. Start small. And then avoid stress spending. Sometimes people spend money because they're stressed out. It feels good to buy something. There's that feeling of, that we feel that makes us feel really good whenever we spend money, but it doesn't last. So if you're a stress spender, you want to find something else to do that's not going to cost you money, some kind of other no-cost habit. And then find an accountability partner. And that is some trusted person, a family member or friend, someone that you want to share what you're working on to help you to stay true to your saving. Someone that's going to maybe call you out if they're with you and they see that you're kind of spending money unnecessarily and maybe you're not reaching your goal. And then the last thing is There is a nonprofit called Consumer Federation of America. Their goal is to motivate, encourage families to save money, reduce debt, and build wealth. They have a Take the Savings Pledge campaign, and it's called America Saves. And they send you email reminders or text messages. And so you can sign up for this to make a pledge to yourself to create a simple savings plan. And then they'll send you those reminders. And you can be a part of a community of people doing the same thing. So the website to sign up for that is on the page. If you go to, or just type into Google America Saves, or visit the Consumer Federation of America website and type in their search field, America Saves, you'll find it, and you just sign up for that, and you'll start getting messages and to help you to save money and doing it with a community. And lastly, I want to leave you with a quote that says, change might not be fast and it isn't always easy, but with time and effort, almost any habit can be reshaped. This is a really good quote because change doesn't happen fast. It's not easy. And sometimes we want to kind of give up. But remember the carrot dangling in front of your face. Remember your big why, your purpose. And that will help you to be true to embracing your change and reshaping your habits so that you can reach your financial goals, the things that you want to accomplish. I want to thank you for viewing this webinar, and it's our hope that you found some of the information that you could use to be helpful to you and your families. Thank you so much, and I hope you have a great rest of your day. Take care. Bye-bye.